I left my job as a venture capital investor when I had the possibility to make more than $1 million to become a founder, to make $50,000 in my first year. And in this episode, I will tell you why I made this decision. In venture capital, you have your base, your bonus, and your carry. And the total can be more than $1 million. As an entrepreneur, you cannot pay yourself the same amount of money. If you do, your run rate won't be too long. Why did I leave the world of investments? Life is a marathon, it's not a sprint. As a founder and as an entrepreneur, the growth path and the trajectory of your personal growth and your professional growth is just so much bigger than as an investor. And don't get me wrong, I love being an investor and I still invest, but as my full-time job, I'm a founder and I'm building a real business. Hi, my name is Alexej and I help founders scale. In this episode, I will tell you 3 key things what made me move from being an investor to becoming a founder. Number 1, skills and your learning curve. Number 2, your network. And number 3, the long-term career outlook. Let me dive into each of them. From a skills perspective, life is a marathon, it's not a sprint. And the learning curve in the investment world is steep initially, but then it flattens out. When you're a founder, the learning curve continues to be really steep all the time. First, you have to learn how to get from 0 to 1, as Peter Thiel's book, From 0 to 1. And that's where you learn how to build your team, how to do your marketing, how to fundraise. And then, once you reach your 1 million ARR or more, you start trying to build the business from 1 to 10. How do you scale? How do you scale your marketing? How do you scale your team? How do you put advisors in place to get you to the next level? How do you challenge yourself constantly, and how do you try to get out of the comfort zone? And then also, how do you deal with competition and how do you outperform the competition? Number 2, the network. When you're an investor, you get a good network. You're going to demo days, you're going to accelerators, you're meeting venture funds, you're meeting other investors. As a founder, however, you are building out a team, you're hiring, you're constantly hiring, and you're looking at so many talented people out there that you're testing these people and you're building up relationships with your employees and your colleagues. Equally, you're hiring agencies potentially to do other types of work, your SEO, your performance marketing, your creatives, your web development potentially, and you're starting to build up relationship with these people. You're building up partnerships, and then of course, you're also fundraising. So you are building relationships with investors as well. And more importantly, you have then investors on your cap table, and you start building up relationships with your existing investors by giving them updates, by meeting them. And so you start building out true and deep relationships. Finally, career progression, right? So let's assume your startup doesn't go anywhere. Now, you can still go back easily to be a venture capitalist. In fact, most venture capital funds are recruiting failed founders who are, of course, successful founders. You can always go back to be a venture capitalist after you've done your business, be it if you had success or if you failed. But think about what will happen if you actually become successful with your startup. You can raise money to do your next startup. You can bootstrap your next startup. You can become a coach and coach other founders to be better entrepreneurs. You can go back to venture capital, of course. Or if your startup has been really successful, you can create your own fund and start investing your money into the startup ecosystem, to the private equity ecosystem, etc., etc. If you do extremely well, of course, you can have your own family office and basically start really building out a portfolio cross assets, cross industries, cross geographies. And so really you can do anything you want if you're a successful founder. So the thought, I did a very classic route. I did investment banking, I spent some time at a hedge fund, and then I ended up running venture capital for a family office. My week was a mix of reviewing inbound opportunities, pitch decks, and investment notes, talking to earlier stage investment funds to see if they have any deals which need follow-on financing or who are about to raise the next round, and whether we could participate in the round, attending demo days of various accelerators, and of course, just talking to other founders and seeing if they have anybody they think is great, or if they have any friends who are looking to launch a business, or also if there are any trends and business models I should be aware of, and then proactively reach out on LinkedIn to founders of other businesses I've heard about. A lot of the time was also spent on due diligence of existing investment opportunities. So talking to clients of an existing company we were about to invest in, or also talking to potential competitors of the business we're looking to invest in to figure out whether the business we're investing in is better than the competitors. All of that sounds extremely interesting. So why did I leave? But again, I was doing the same thing every day and every week, and my learning curve was just flattening. I was asking myself, why did founders take my money instead of the money of a much better well-known fund like Andreessen Horowitz or Sequoia or Bessemer? And the reason was that the deal flow we were getting was not as high quality as some of the top funds out there. Then I asked myself the question, well, how can I optimize for a better deal flow? And the answer was by looking at some of the brands in the VC world, the personal brands such as Harry Stebbings, Andrew Chan. These guys have been putting content out there for years and years and years, building on their personal brands. The other type of brand out there was Andreessen Horowitz, right? And if you look at Andreessen Horowitz's history, he was an operator, he was an entrepreneur. If you look at Kotler, he was an operator, he was an entrepreneur. And so a lot of the top VCs have either been founders themselves before, or they've built up a massive network and a massive following and audience through publishing a lot of content, or they've done all. I mean, if you look at Andreessen Horowitz right now, they are operators and founders at heart, but they have a podcast, they have a newsletter, they have a massive team putting content out there and being extremely visible to all the top startups out there. So I asked myself the question, sitting in London, nobody knows about our fund, who will come to us to get investment? So on the one hand, I realized that the deal quality is probably not the best you can get. And on the other hand, I realized, well, am I in the best position to actually be the best partner for startups out there? And C, as I mentioned before, life is a marathon, it's not a sprint. Do I have all the skills I want to have in an individual? And are there any other skills I want to still learn as an individual? As an investor, you hear stories how the hiring is hard, the marketing is hard, or the hiring is easy, the marketing is easy, but you don't really know how hard or how easy it is until you do it yourself. And so as an investor, I was sitting there and I was thinking, well, I want to be a founder myself. Not only I will be able to help founders scale better and make better investment decisions if I have the operating background, but also I would develop my skills and strengths much better going out of that comfort zone as an investor by becoming a founder. But the question, of course, was how do I become a founder without having a business idea and without being passionate about some problem I want to solve? So I started thinking, how do I actually become a founder? And in my case, it wasn't a very simple transition. In fact, I was actually trying to raise a cannabis fund first. And of course, don't get me wrong, a founder of a fund is a founder and is an entrepreneur. It's a financial entrepreneur. And I was basically raising a cannabis fund, which, because I couldn't find an interesting founder to invest in, and I saw the massive growth of cannabis and the massive regulation and the massive changes in the regulatory environment, I realized, why don't I create a cannabis platform myself? So I started the founder journey myself by thinking about an industry which is growing, by thinking about a problem which there was no marketplace in Europe, and started assembling my team. I started to learn how to hire. I started to learn how to incentivize people. I started to learn how to fundraise. I started to learn how to do marketing. All of these different skills which I didn't know before, and some of them I maybe have known on paper or have been saying to a startup before as a VC that I know really well. But the reality is that this learning curve and the skills you're getting are invaluable. If you like this video, click the like button and subscribe.